everyone. Good evening and welcome to Sakshi Money Mantra. Nenu Karunya Rao, and every Friday laga malli oksari meeku oka market voice తీసుకొచ్చాం. ఆన్గోయింగ్ ట్రెండ్స్ ఎలా ప్లే అవుతున్నాయో దాని గురించి మాట్లాడడానికి, ఎక్కడెక్కడ మీరు పెట్టుబడులు పెట్టొచ్చు, ఏ స్టాక్స్ లో ఇన్వెస్ట్ చేయాలి, ఎక్కడ ఆపర్చునిటీ ఉంది ఈ మార్కెట్ లోని, ఇవన్నీ మేము మాట్లాడతాం ఇవాళ మా గెస్ట్ తో. Ruchit Jain is joining us from in 5paisa.com. Ruchit, thank you so much for taking time out and chatting with us today.
Yeah, hi Karunya. Thank you very much for inviting me to your show today.
Thank you so much. Before we begin, I just want to tell our viewers, ఎవరెవరు ఈ షో చూస్తున్నారు, మీరు కామెంట్స్ లో మీ ప్రశ్నలు, మీ క్వెరీస్ మాకు పంపించవచ్చు. నేను మా గెస్ట్ తో చెప్పి మీకు అవి అడ్రస్ చేయిస్తాను. బట్ రుచిత్, just to start with, how are you analyzing the market volatility? Especially the last week, 10 days have been rather, yes, we have been range bound, but extremely volatile and wavering within that range quite a bit. Intraday also, and overall in the last week as well. What do you make of this?
So, Karunya, last 4 months we have seen a one-way rally in the markets, where from the recent lows of 16,800 during March end, we witnessed an up move almost to test the 20,000 mark during last month. So we didn't had any kind of significant corrective move in this last 4 months. But this month, I think things are a bit different, because we have seen some negative news flows, much of the negative news flows in the global markets rather than any domestic factors. Where what we have witnessed that it started with the recent downgrading of US credit rating by Fitch. Then we have seen hike in interest rates by US Fed. Now recently the concerns over China's economic growth was there. So all these negative news flows has led to global markets volatility as well, and even some factors such as depreciation in the INR has added to this negativity in the markets. So what we are seeing that it's more because of the global front that we have witnessed this correction, but the market breadth has not deteriorated much. So this just seems to be a regular correction within an uptrend. So we believe that such dips should be seen as a good buying opportunity for mid to long term traders. Of course, trading is a bit difficult in very short time frame of view, because FIs have not been buying in this month. Now last 4 months when the markets had rallied, each and every single month we have seen inflows from FIIs in the cash segment as well as in the index future segment. But this month they have sold equities in the cash segment. In index future segment also they have about 60% of their positions on the short side. So until FIs again start pouring in money over here, I think we would continue this consolidation. But as I said, the domestic factors are very strong. We don't see any problem with the domestic factors, so it's more led by the global news flows. So short-term trading, we could continue to witness some volatility, but any dips towards that 19,000, I think market would again try to form a support base around that 19,000 plus minus 100 points, and then we should see the next leg of rally. So this correction should be used as a good buying opportunity, but of course you need to see some from some positional perspective. One should look for buying at around the 19,000 mark.
Okay, so there is a chance that we can hit 19,000 also on the downside, is it?
Yes, so we have seen that this entire week, also last 4 trading sessions, market have not seen any kind of buying interest. So we have closed around that support of 19,250, 300, but the data has not turned positive yet. So early next week would be very crucial to see if we see any kind of positive data from the FI figures or otherwise. And if we don't see that positive data, then there are quite chances that we should slip towards the 19,000 mark.
Up until now, FIIs, yes, they are largely selling in the Indian equity markets, but DIIs were able to offset that pressure to a great extent. But last few days, even DIIs have started some amount of profit booking. Does that concern you right now? Should investors be worried, especially retail investors, that institutional guys are dumping so much?
So I think one should not be much concerned about domestic institutional investors, because the kind of flows, the SIP inflows that we are witnessing month on month in mutual funds, I think any kind of significant decline if we see, then that would be supported by DIs buying again. But what is concerned is the FIs buying and selling, because even if you see last 4 months figure, I'll just put in front of you. In the month of April, FIs had bought equities worth around 5,700 crore in the cash segment. I'm considering from April because we had bottomed right at the start of April itself. In the month of May, we witnessed buying of 27,800 crores by them. In month of June, again 27,250 crores buying was seen. In the month of July, 14,000 crores of buying was seen. So these 4 months when the markets had rallied, DIS had not put much money. We didn't see any fresh investments by DIS coming around then. DIS were buying when the markets were correcting in January, February, March, where if you see the buying figures at that point of time, around 20 to 30,000 crores buying was seen. Right. So the recent momentum has been led more by FIIs buying. So I think DIS would provide support in case of market witness any significant correction, and that's the main reason what we had seen about few months ago when the global markets were correcting very sharply. Our markets had shown relative outperformance to global markets. So DIS provides support, and that is leading to relative outperformance in the Indian markets compared to the global markets, because all the FIIs selling have been absorbed by DIS buying in before the month of April. But what is concerning is the FIS figures. If they don't turn buyers, then I think that momentum would be lacking going ahead. So in this month, they have sold worth rupees just over 10,000 crores in last 18 days.
Right. Okay. Let's talk about the positives now, the opportunities at 19,000 or close to 19,000 levels. What kind of pockets or individual stocks or even sectors that you think one should lap up at lower levels?
So I think a couple of themes. First I will start with the banking and NBFC space. So primarily, many of the index heavyweights come from the banking and NBFC space, and what we have seen that the result in the recent result season as well, this has been one of the pocket which has managed to show better results. Right, so I think banks would be one space where a good buying interest could be seen, and what we are witnessing now is that mid and small size banks are witnessing good buying interest. Good price volume action has also been seen. If I just give an example, few stocks such as Bank of India, Bank of Maharashtra, UCO Bank, some of the mid-sized PSU banks have after a long period of time we are witnessing such kind of volumes coming in such mid-sized PSU banks. So this will be one space that we are watching out for. If one is looking from next 3 to 6 months perspective, then a good outperformance in such mid-sized PSU banks could be seen. Secondly, PSU as a theme has been working quite well since last 6 months. Many of the PSU names have done well. PSU railway stocks have also done well. So I think the kind of buying interest that has been seen from traders and investors in last 3 to 4 months, this theme has a lot of legs to unfold. So I think a lot of upside is still left in many of the PSU names. So I think this would be one other pocket that I would watch out for on any kind of declines.
But PSU banks have already rallied so much. Do you see more promise there?
Yes, if you compare it last 4 to 6 months, then you can say that they have rallied significantly. But if you look at some of the long-term data, what has happened in last 6 to 8, 5 to 6 years, so I think still a lot of steam is left because a huge underperformance has been seen in most of the PSU names. And after such a big underperformance, the fresh buying has been seen. So I think a lot of catch-up move is still pending in most of the PSU names.
Okay, all right. What about IT? Again, we did see, start to see some buying action in IT after the, overselling that happened over the last few months. But again, IT has been very unstable. There are good days and then there are, there's a spate of bad days as well.
Yeah, so Karunya, I think it's more because of the results that they have posted in last couple of quarters. You can see Infosys in last 2 quarters have been disappointing with the numbers as well as the near future outlook. And that's why we are witnessing that the IT as a whole is not witnessing such buying interest. Now within the IT basket too, these last 2 quarters, some of the mid-cap IT names have posted good results. So that's why we are witnessing such diversified trend. You look stocks such as Cyient Limited, just to give an example, 1 or 2 names. So mid-cap IT names have been doing well because they have been posting better numbers than the large cap IT names. But I think the long-term investors would like to wait and watch some decent numbers being posted by, or at least a good revenue guidance being given by large cap stocks such as Infosys or TCS. I think till then this consolidation is likely to continue, where in any kind of pullback moves we would witness selling pressure, and on declines some buying could be seen when they become relatively cheaper. But as a whole, the kind of move that we have seen in the other sectors, I think that thing is missing only because of the results are not up to the mark from the large IT names.
Okay, all right. Could you also talk to us a bit about metal stocks? Very, very volatile again, and very, very, seesawing, divergent moves. What lies ahead for metal names?
So I think a lot of global impact is coming on the metal names. Usually, when the metals have an inverse correlation with the dollar. So when the dollar index goes down, metals go up and vice versa. So what we have seen in last 4 or 5 months, the dollar index made a high of around that 117, 118 mark. It corrected towards 9900 mark, and some pullback move has been seen off late. But the metals have not given that high returns when the dollar index has corrected, primarily because the news flows from China has not been good. Now China controls much of the supply or the production part of many of the metals. So the demand from the China is not there, and they have been dumping metals at lower price, and that's the main reason the base metals have not performed quite well in spite of recent fall in the dollar index. So there's the thing that the metals, I think would continue to show such lackluster movement unless we see some government imposing any kind of duties which would make import of Chinese metals unfavorable over here. So till then, I think some relative underperformance or such lackluster trades would continue in the metals place as well. But few of the stocks, I think, some of the stocks such as NMDC, which is providing very good dividend yield, the valuations also are quite good. I think those could be seen from a mid to long term perspective from the metals names. But from short term perspective, I think the news flows would drive the momentum rather than the sentiments.
On one hand, we're seeing markets posting their longest losing streak since May 2022, and then mainly this time around the culprit is IT stocks. Metals, of course, like you said, have been treading with a lot of caution. If one has to ask you, should one look selectively at metals or select stocks in IT? What would you tell them?
I think one can take a combination of both. Select stocks from the IT can be picked up, but especially if you are mid to long term investor, not from a very short term trading perspective. Certain large cap stocks such as TCS, HCL Tech are trading at good valuations right now. So if going ahead, any kind of positivity is seen from these large cap IT names. So just because they have shown a relative underperformance all through this rally, I think then these stocks could see a good catch up move going ahead. Within the metal space also, as I said, I would be very selective. Maybe NMDC is one of the name that I think the downside should be very limited from here on. So such names where high dividend yields are there would provide would be relatively safer compared to other high beta metal names.
Okay, all right. I just want to understand your view on FMCG as well. While some names have really, outperformed in the recent past, some are still, bit of an underperformers. So, talk to us about FMCG and any stocks there that you find interesting at the current level.
So the FMCG index have rallied significantly in last 1 year, and the main reason for that rally was ITC. Because ITC has a good weightage, and we have seen that from the 200 220 range when it came out, it's witnessed a one-way move in spite of what the market was doing. But off late we have seen after this demerger announcement from the ITC as well, the stock has witnessed a pullback move. Other FMCG names also very selective up move has been seen. Only few of the names such as Kolpal have shown outperformance. Otherwise, not much buying interest have been witnessed in many of the FMCG names. So I think here also some consolidation signs of some consolidations are there. So in near term, I think some consolidation or sideways move could be there within the FMCG names. Selective names such as Kolpal, which has shown an outperformance, that could continue its up move. ITC also has witnessed some decline from the recent swing highs. So the downside could be limited from here on, but at least I can't find out any names where you can expect an exponential up moves in next few months from the FMCG space.
Okay. Just to conclude, Ruchit, what is the kind of range that you foresee for Nifty 50 in the next few weeks?
Yeah, so going ahead, as I said, around 19,000, I would be watching for the markets to form a good support base. So overall trend is positive. One should not forget that this is just a correction within a larger uptrend. And on the higher side, resistance is around 19,500 followed by 19,650. And once these resistances are surpassed, I think markets should then resume its uptrend towards the new highs. But for that, the data needs to turn positive. From the start of this month itself, FIs have not been buying in the cash segment. In index futures, they have about 60% positions on the short side. So one need to keep a very close watch on their data. Once you see buying coming in the cash segment from the FI's front, or if they start covering the short positions in the index future, then I think that will be the sign that the momentum would resume on the higher side.
All right. Okay. Thank you so much, Ruchit, once again for joining in and for
Thank
talking to
you.
us about a host of sectors and stocks with our viewers and sharing your inputs.
Thank you, Karunya.